In this video, traders, I'm going to talk about a trade that was super annoying and frustrating, but I'll still take them all day, every day. Stay tuned. Hey guys, very warm welcome to you. All right, so talk about a trade I took on the S&P 500 the other day. It was a great trading setup. It's a rare setup to have, and it's such a good setup, but this time it just didn't work. But does it affect my thoughts on it? No, it doesn't. Does it make me look at it and see if I could trade it differently? Yes, maybe. Should I be making too many adjustments to it based on one sample size? No. So I'm going to share with you the setup right now. I'm going to look at how I took the trade. I'm going to look at maybe some of your ideas in the comment section below if you think how you would trade it slightly differently, etc. But anyway, this is what it was. It's a nice setup. It's a lovely setup. I see it. I'll take it with the size all day, every day, and I'll continue to do so. But this one didn't quite work out. Let's have a look and see what it was. All right, guys, so I've got for you a SPY chart. So I'm using SPY because the S&P 500 ETF purely because I want to kind of show you the volume. I want to show you how it fit in with the prior day's high, etc. like that, just for the regular trading hours session. So this is the scenario we'd had. The prior day, we gapped up. We had this horrible drive lower. I'll say horrible, it's actually profitable drive lower, but horrible in terms of if you're looking at the strength of the market. Push lower, and then we kind of bounced back up. And this was interesting because we bounced back up, bounced lower, all over the place. Anyway, the next day, this is the day I'm trading, we gapped down, filled the gap really quickly, took out the high, flagged, and then pushed higher. Now, there was opportunities on that all over the place. It was a lovely open, lovely kind of move. But the trade I want to point out, which was the trade that just didn't work, but it's such a lovely trade to take, is this one. So after you've had a drive from from low to high, you're in a trend day scenario. So at this point here, when we're looking at the cursor, we're like, hey, we're in a trend day. We've taken out highs, we've taken out the gap, we've not stopped, we've just driven hard off the open. And then we sit at highs here, and about the right sort of time as well, about UK close time is about the high. We have that very often. Sits there and just starts to stagnate and drift lower very, very slightly. This is textbook stuff, guys. Textbook trend day scenario. Drive higher, runs out of puff, but doesn't kind of come back down here. Just sits here, just sits near highs and just happily sits there. And what you're looking to do, or what I'm looking to do, is I'm looking to get a move to the downside. There's a little flurry to the downside that I can get on that's going to then eventually take out and close at highs. That's the thesis, and that happens very often. So in other words, if we look at it from this perspective, we want this kind of scenario here, a little dip lower, and then I want to push to the downside. I want to be buying on this dip lower, and I'll be holding it until the close. So that's what I was setting up for. That's what I was looking for. And lo and behold, we got it. It was great. Sitting there, bang. This is my low, mark my low off. The VWAP is here as well. VWAP's brilliant indicator guide. Talked about loads. I think you're missing out if you don't have this on your chart and you're intraday trading. So pushed up, we pulled back just under here, a little bit of volume spike, just tagging that VWAP, bang, I'm in, and I've got a beautiful little entry on this trade. Okay, market's just sitting there, nice little tape read. I think that I'm sitting here, I think this is great. I think that we are going to, push up higher, starts to push up higher, nice strong move, and we're sitting about here. Now I tighten up my stop and I leave the trade alone, and I say, listen, I'm going to come back at the close. I'm not going to touch this thing, either stops me out or I'm going to see where it is at the close, fully expecting that this now, after this little shuffle, which we see very, very often, guys, push the downside, immediately retraces, that now that will be the catalyst for, in the kind of final hour, to push on and do this, and it will be a lovely trade. However, as you can see, that didn't happen. It actually started to push back up and then just started to roll over and take out the VWAP here again, push back up, was messing around and kind of stagnated. And ultimately, if I hadn't have been stopped out, it would have been a very small profitable trade, but I got stopped out for very minimal loss, purely because, the reason you've got to have your stop here, in my opinion, is that if you start to get this and it comes back down and takes it, the probability of us perhaps doing some work to the downside becomes so much higher. Now, yes, in this case, it didn't do that, and it did push up, and it did kind of push a little bit higher and would have been a little bit of a money maker. But you've got to go with probabilities, and you've got to look at the whole bigger picture. If the trend is up, great. You get the first pullback here. You want there to be continued buying after people buying on dips, institutions waiting, especially when the VWAP considering it as value to push back up and at least retest the high or close at highs on the end of the day. But the fact that it's going lower again, it just reduces the chance of that trade being a success. And in my eyes as well, by the way, this is a 1 minute chart, guys. In my eyes as well, yes, in theory, I guess the trade could have been taken again as he pushed back up above the VWAP, but you start to reduce the odds of the trade working. You start to reduce the way the trade works. The very best trade always works when you get this scenario, and let me try to find the right thing here for you. There it is. Always lose that. This is the scenario you want. You want this dip. You want to see this range at the highs. You're kind of looking and you're putting your your fibs or whatever, or just using your kind of quadrants and going, right, we're up in the upper quarter of the move. We're driven from low to high. We're in the upper quarter, a little dip below it and then back in, and the VWAP and the kind of support level as well. All sets up for saying, great, there's a good risk reward ratio to the trade. The win's behind the trade. The stop is an obvious place. And guys, sometimes you just get stopped out. Sometimes that's the way it is. But the best trades are when you can, with authority, say, hey, I want my stop there. And I know that that's going to protect me. And this is a sweet spot. It's got volume as well, and it's pushback. There's so many attributes for this that I'd take it all day, every day. And this one didn't happen to work. It rolled down, pinged me out of the trade just about, and then carried on. And it's a bit of a giveaway, really. Yes, it's a profitable trade if you'd have kept it. I didn't, so it's a loser. But it's a bit of a giveaway when it has a weakness that it's not going to push to highs. Because if a genuine trade does this, pitch the lower and comes straight back up, you know the supply-demand imbalance is there in demand. You know that there's likely to be a good shove on it. The fact that it did it a second time, sat there and it waited until it didn't do much, shows you that it's kind of balanced. It's kind of balanced there. So that's really a trade that I like to look for. We don't get it very often because don't get that kind of low to high or high to low drive, and you've got to kind of not get a reversal as well. It's got to sit there in the high, chug, do a little dip around this kind of time. VWAP often is not that close to it, if I'm honest. Often the VWAP is more, where's my pen gone? Lost the thing. Is more this kind of scenario. It's a bit shallower normally. But the fact, I guess, that we've done quite a lot of volume here and the spike, it caused it to kind of drift up as well, means that it came into play. But that's the nice thing, guys. If you see this, you see it drifting for a while, see it drift over, pull back up, you can quantify the risk. You can take a trade, especially as your reward is going to be, potentially at highs. It's a decent risk reward ratio. So I look out for those. I'll take them again if I see that kind of trade again. I like it. Quantifies the risk. You're aligned with the bigger trend. You're waiting. You're not chasing. You're waiting for a little pullback. You're waiting for a lot of things to line up before you pull the trigger on it. This one didn't happen to work, but that's trading. That's why we always look for a place where we can express the trade and quantify that risk with the sensible stop placement. If you like this kind of stuff, thumbs up appreciated. I'll see you next one, guys. Take care. Bye-bye.